Well, hello folks, I'm LA Little and this is your weekly NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves what happened last week and what does it tell us about the coming ones. I do this show once a week every Sunday night, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little. You can catch it there, view it anytime, any place, any device at your convenience. And with that, let's get started. If we look at what happened last week in terms of the numbers, big up week, as you know. We have had a gyrating market for on the order of about 8 to 9 weeks now, getting 2-3% moves on a weekly basis, flat on the year. Really haven't gone anywhere. S&P slightly down, the rest of the market slightly up or flat. So here we are, 5 weeks into the year, and essentially we've gone nowhere. And so if we pop over and look at the charts and look at the S&P 500 in particular, you can see that so far the retest regen zone on the weekly bar is holding, right? And it's holding. There was that push down right at the beginning, or excuse me, the end of last year, push down. Yeah, I guess it was like the middle of December actually. Pushed down, set a new swing point low, spikes back up, right, makes new highs, comes back down, and we've been thrashing 5 weeks, 2 to 3% each week, actually 2+%, almost 3 every week for the last 5. You had 2 little bars up here, you had the thrash here and the thrash there. So 7 out of 9, you've thrashed up and down, but so far, that swing point high still holds. And as long as that holds, this market can go higher, and there's nothing to stop it from that perspective. If we look at it on a daily basis, you can see that push down in December, the straight up push right back up, right? Then we come down again, and we do this gyrating thing now ever since. If you're trying to trade this market on a short-term basis, odds are you're probably getting chewed up. Friday, for example, got over the swing point highs, trades over it, volume a little bit heavier, but fails on price. The fact that volume was a little bit heavier says we probably will try to do it again. But if you look at it, then you have to say, okay, where can this thing pull back to? We've talked about before, and we're still in this range where the S&P 500 has continued to trade in this upper half, but it's been unable to push back to the top bar, to the top of the range. So we're in the middle of the range. We keep thrashing between the middle and the low. We can't quite get all the way down here to the low, the low of the lows maybe is the way to say it. But so far, every time we push back up, we're failing too. This is the 3rd attempt now to push over. We've had more than 3 attempts at the backside. None of them have worked. This market, as far as we can tell, just looking at the charts, is still just a range-bound market. That range is defined by this area here, and the larger one by the larger ranges up there. As we talked about last week, and actually as we talked about on some of the daily commentaries, you've got to believe stops are building up in this area, just as you've got to believe they're building up in this area. Now the fact that we pushed over here, and on the backside we pushed under last week. So last week we actually pushed under, reversed, and pushed over and reversed. That tells you that those stops aren't sitting right at this level. Matter of fact, they're probably a little bit higher up here, and the same thing down here now. They're probably just under these lows. So the big move, if it happens, is going to happen probably at this point off this bigger range. If you just do a range projection off of that, we're talking very large numbers. Low of this is 1972. The high is 2085. So we're talking about 110 points or so. So if you pop on 110 points to the top, that gets you up to almost 2200. If you take them away from the bottom, it gets you down to about 1860. And so now if we take those two numbers and we go back to the weekly chart, 110 off of this was 1860. 1860 brings you into this bar somewhere about in the middle where you see the support zone actually. If you go the other way and put 110 on top of that 290, it takes you to 2200. So you can see these are going to be large moves once this thing breaks one side or the other. But so far, there's no break. There's no indication of a break, not at least on the S&P. There was an attempt last week, didn't quite do the job. NASDAQ, pretty much set up the same way. You got a swing point high here, you have multiples there. The thing you have on the NASDAQ that you don't have yet, at least on the S&P 500, you won't get that until next week, is you actually have multiple swing points on multiple time frames now on the NASDAQ composite and on the NDX. You can see them here on the weekly chart. You got them at the top, at the bottom. So if you take that range again here and you project that both sides, you can see the kind of moves that would take place if in fact this thing breaks. And the fact that you've got the multiple swing points says that when it moves, it probably is going to carry. And you would think it will carry because the stops have built up on both sides on the NASDAQ just as they're building up on the S&P. And going back one more time to that S&P, you know, if you look again at that weekly, this price point is going to print. That one right there is going to print at the end of December next week as a swing point high, assuming this thing holds up again. If you look at the NDX, the weakest one of the four, that one can't get going, but it also has the swing point high up here. And if it goes long enough, it will print one down here, but essentially it's going to carry probably if it falls through. The Russell is the only one, and it was given it to us Friday, is the only one that's indicating that we may see this thing break to the top side. And that's because the Russell has actually broken out of that range and held it for 2 bars. It broke out on Thursday, held on Friday. This thing has swing point highs here and on the daily. So again, the range really is the big range, whether you look at it here or you look at it in the broader perspective. You know, the Russell is kind of interesting because if you pull the monthly chart over on this has been going sideways now for essentially a year and a half. I mean, you can go down back to the highs of July. You know, it's a little over a year and a half. The highs of July were the top of the range. And that top of the range was after a push. And if you take this back and do it again, right, you can see kind of an equidistant range under below it. It was just straight through, straight up, and now you've consolidated. I wonder to myself, are we going to see this kind of consolidation take place for a year in the S&P 500, in the NASDAQ? You know, if we go back to these and look at them on a weekly basis, is this going to crawl across for a long period of time? Might it be the whole thing? You know, maybe that range this year is going to be something like that, right, all year long. It's not clear yet. You know, right now you still got to go with the trend. If you got to, you know, if you got to be wrong, you want to be wrong with the strongest part, and the strongest part is the trend is up. So, you know, if you want to be wrong, I'd be wrong on the long side. But one has to wonder if in fact we're going to see consolidation after 3 years of basically nothing but up. That's the indexes. I want to flip over to the world markets as a segue here, because in the world markets we're seeing some extreme strength in a lot of these indexes. And if I pull this over, I'm going to look at the weeklies on this. Here's the All Ordinaries, breaks to a high, has volume, and that's a result of them devaluing their currency. The Indian market, same thing, went to a high, coming back to do a retest regen. Brazil is in its own world and at the lows, but elsewhere, if you go to Europe, You know, here's the CACs over the highs, holding the highs. The FTSE, you know, over the, well, not over, but right at the highs, trying to break out. The DAX way over the highs, right? This one's already broken out and extended farther. They do look like they are going to come back, but so far they haven't. If I look at the Hang Seng index, you know, this one's pushing up to try to test the highs. The HCAP shares, and I promise pretty soon I'm going to switch this over as I get enough data on the actual Shanghai index again. But as I look at this, you know, this one's still holding above the highs. And then if we move over to like Japan on a weekly, still holding at the highs. If we look at the Taipei, this one's pushing to the highs. And we just keep going down the list here. The Straits Times, you know, the Indonesian market at the highs. It's at the highs pretty much around the world. It's not just here where we can't get over the highs. The rest of the world's pushing highs. And you got to thank QE for it, because that's really what's going on. And if you don't think QE is what's going on, and by QE I mean that everybody else's currencies are depreciating relative to the United States, just look at the dollar. This dollar has skyrocketed up. You know, it's put on probably what is that, about $4, so that's about a 20% move in the dollar. That is not a small move. And we keep hearing earnings reports that are being hurt by a strong dollar. And I suspect it's going to continue because this dollar doesn't look like it wants to come in. So unless they do something about it and start hedging, they're going to continue to have currency issues, because the dollar is much more expensive than almost every other currency right now. And as long as the Fed looks like it's going to increase interest rates, which after Friday's employment number, it still looks that way, there hasn't been any indication that it isn't, then that's going to result in, you know, this dollar staying strong and putting pressure on the various equity markets as a result, the domestic ones. Here's the euro down at the lows. This is a weekly again, and it looks like it's going to try to test that low again. And then the yen trying to come back down to test the low again. It does appear, from what I can see, that the dollar isn't going to go skyrocketing again, but instead play out in a larger range, because we're starting to see ranges form on these other foreign currencies, in particular the ones that are heavily weighted against the dollar. If we look at one other thing while we're here, the bonds. Bonds took a pretty good dip last week. It looked like they want to come back into a swing point high. I don't believe the run on bonds is over, but this bonds trading off as they are, and the fact that we're seeing you know, like junk bonds, if we go to those, the fact that we're seeing junk bonds try to lift back up now, that kind of suggests that, at least for now, some of that fear seems to be coming out of this market. And you can also see that in gold trading back down this last week. And you know, all of that suggests that maybe that fear is just starting to abate. And part of that is that oil's trying to bounce. We got a big push up last week. We're 20% off the lows already, if you can believe that, in oil. It's pushing back into this low. That low is 2053. I suspect it's going to try to get in there on a daily chart. That is the retest regen on oil. So if we look at it here, that low on oil, 2053, you almost got to it here. Looks to me like you're going to try to get into that. I suspect that retest regenerate on the first trade back into it is probably going to hold. And there actually was a retest right there immediately, but on a week on the daily. But you know, even the second one on the way back probably going to hold. So oil, it looks like that fear-driven trade off of oil and off some of the other items may be abating a little bit. And we may see this market try to push back up and test those highs with some of that fear coming off as a result of the strength around the world. Okay, let's look at a couple other things real quick. One of the items I want to switch over to is the emerging markets. Now, the emerging markets, even though you can see here on the daily they're trying to push higher, if you look at them on a weekly, they've really struggled. They've struggled mightily, right? Traded down. Even when we're seeing the rest of the world markets pushing up. Now, the reason I brought this up and I wanted to talk about it is this low was tested, or it basically got, almost as close as you can get to a test. I don't think it actually got under it. Let's make sure. 37.05, we got the 37.23. So you come down, you almost test it. You don't have quite as much volume. That high of that low, 39.02, last week came right to it. 39.02 doesn't have the volume. This appears to me, this big breakdown bar, tested into it, couldn't get over it. That's a retest regen on the bearish here. This actually looks to me like it is going to hold this area, is going to push back up and try to get over that retest regenerate zone and break the downtrend that's in effect still here on the daily chart on this EEM. So I don't know if that means Brazil's going to somehow start trading higher, or is it going to be the other countries pushing it up, or I don't quite know what it is, but it does look to me like this is kind of breaking the trend here, and I would expect this emerging markets MSCI to actually start trading probably back to the top side. I got a couple of viewer questions. I'm going to segue into that next. The last thing I wanted to talk about, though, is just kind of a synopsis of where we're at. If I go back real quick here to the general markets and I pull up the S&P 500, I think this is the key chart to watch this week, and really to watch these swing point highs. To get a break of these highs, you're going to need to get over it, stay over it, and keep over it for a couple bars. If that happens, then I think there's a really good chance this thing could finally make the break and at least get some sort of a nominal new high up here. But it's not going to do it, clearly not going to do it, if it can't get over this high and stay over it. And so, these two swing points, they're key. The move last week was all the way from the bottom all the way back to the top, 70 points. The retrace can come to one of 2 points, it looks like, in my mind. One of them is right here. That's a very optimistic retrace. The more pessimistic retrace is this deep, right? And of course the worst case is to come all the way down here and test it again. I would think that if it holds this area, that gives it a pretty good chance to try to break it out, and it would set up, if you think about it this way, it would set up some sort of an ABCD structure, right, to the top side, wherever the pullback was. Even if it was this deep and it held, that would pull back an ABCD structure, get it nominal new highs. So the real key is, will there be a retrace that holds? I suspect we will see some sort of a retrace. For the bulls, the better retrace is to just retrace immediately and don't test again. Right? Build some strength and go after it again. If you test again tomorrow and you fell again, then that makes it much harder and probably pushes much harder to the downside. So, if I'm bullish, I actually want to see it just come back, find support, find it here, or maybe find it, off of this bar, or find it in this zone that we have drawn in here on the TA Today charts. Find it down here somewhere, set up an ABCD structure, right, and then try to get the push and the break. That could get some juice to the upside. So that's what you're watching for. Worst case, you come all the way down here and you test these lows again. But when you're moving 70 points in 5 days over and over, it makes it very hard to break out either side, and that's exactly what happened again last week. You need a retrace that holds in the middle. I mean, look at this. Not one of these has held the middle yet. On the downside, it's been straight down all the way down. Right? On the upside, it's been straight up all the way up. Right? No break. When you do that, by the time you get up here, you're worn out. In other words, you've already bought what you want to buy. And there's just not a lot of quote-unquote new buyers to push this thing higher. You need something that comes down and stops and then comes back, and it's a 30-point run of the highs instead of a 71. So that to me is kind of the key. When we see that, that's going to give us some indication maybe we're going to see a potential breakout on the next test. And that would be to the upside or the downside. Okay, let's take the viewer question next. We got the HDJ up. The question is, this person had a position in it that got stopped out on all the swings. The stop was too tight, and so I assume these swings up here. And I'm looking midterm, which means intermediate term. With the euro still trending higher, it should pull back on the hedge, potentially, and Greece, also could bring it back. Do you see a buy point either medium or short term? There's also some information here about, which is kind of interesting, half of the 5.9 billion that's moved into currency hedged ETFs, and this is a currency hedged one. What it means is that they've kind of taken the currency out of it, because if you look at, let me show you here, the EWG, right? You can see that the EWG came back up to the highs, barely got over them. Let's pull this back to a weekly. You can see how much weaker this is versus the HEDJ, which is, it's not quite the same. It's not quite the exact same index. The J is actually for, here. Let's do this. Here's Germany. HEDG, I believe it is. I guess I don't have it right. I forgot exactly what Germany's is, but they're not exactly the same instrument. But you can see here that there's a vast difference in the way a hedged versus an unhedged currency is trading when the actual currency that the market is in is depreciating. So in other words, the dollar is getting stronger. That's going to make dollar-denominated ETFs, foreign ETFs, right, overseas ETFs, worth less. They're not going to do as well because they're going to get depreciated. I mean, that's just like I was talking about earlier. These currency, the dollar being so strong is hurting the bottom line on corporations. Well, it does the exact same thing in an ETF. It does exactly the same thing. So anyway, let's get to the point here. The point is there a place to buy this thing? So I guess, let's start with the monthly. So we got a swing point high. We didn't quite get over it yet. We had a lot of volume coming into it. That low is 58.11. So that would be the first thing to note, 58.11. Let's go to the weekly. 58.11 to get you back in the bottom of this bar. So the most optimistic place to get back in would be right here at the bottom of this bar. Now that's very optimistic. That's, even though it's only 3 points down, it's like 5%. It's going to be hard to get it back down that far. If we just take the retest regenerate zone, which is here, that low on that retest on the weekly, 59.51. That's probably a more optimistic place that one might be able to get in. It traded as low as 59.86 on last week, so it almost got to that low. So that would be the most optimistic place to be looking at. Optimistic in the sense that it's realistic, right? And if we take that same price point here, 59, we'd get you back into these highs. Now, on this time frame, this retest regenerate zone, it looks like it just barely held. That low was 59.92, 59. Yeah, it actually got under it, but didn't stay under it. So you can see this is probably the spot you want to try to get into it. So that's 59.92, and yeah, I think you're going to have a hard time getting it much cheaper than that, which is not that far away, which feels like you're paying a lot for it since it just ran up, $7 on a 54, which is 7+%. So you're not going to get much of a pullback, in my opinion. So if you're going to buy it, you're just going to have to, edge in here. And then this is one of those trades, in my opinion, that you buy it at say 60, right? You go to the weekly and you say, okay, maybe 59 on the weekly. and potentially as low as 57, 58. So I just start buying at 60, try to buy it at 59, try to buy it at 58, and keep my stops lower based off of this big bar. And that bar is 59.80, so somewhere underneath there. If it got down much lower than that, I'm trying to see how far I'd go on the stop. Yeah, I just probably wouldn't give it much more than that. If you want to be really safe, you could keep the stops at about 56.80 or something. But you're shooting for a big upside here. I mean, you've already, it's probably not going to come back. I mean, just look at it. You got an ABCD structure up, right? Back down. It's probably going to finish that structure out before you get the retrace, and then that retrace is maybe halfway down before it tries to go again, right? So I don't think you're going to get a deep retrace, and you're just going to have to take what you can get with the idea that you'll buy some more if it gives it to you. Okay, well, that's it for this week on the weekly. I'll see you tomorrow, and we'll do it all again. I expect we're going to get a retest of those highs. Whether it comes immediately or comes a little bit farther down the road is a toss-up, because there's no strong indication that it has to come right away. If it came right away, I think it's actually detrimental unless it really breaks out and holds, and I think that's going to be hard to do. All right, have a great one. Thanks for joining me. Until next time, take care. See you then. Good night.